Good morning and welcome to the Canaccord Coffee Break podcast. I'm Jane Parry, the Chief Marketing Officer here at Canaccord Wealth. And this week I'm delighted to be joined by special guest star John Pullar-Strecker from our Chief Investment Office.
Morning, Jane.
Morning. Welcome. Haven't seen you on the podcast for a while.
Thank you.
Nice to have you back.
It's been a little while, so great to be back.
Good. So as you know, each week on the podcast, we try to cut through the noise, demystify what's happening in the markets, and then hopefully help our listeners feel more informed, confident, and in control of their financial future. So this week, John, my big question is all about the UK stock market for a change of scene. And it seems that overseas investors are rushing in to buy Britain. So the British stock market looks relatively cheap, but also why are they rushing in to buy Britain and why are British investors still rather hesitant? So I'd like to get into that. All because takeover activity seems to be running at record levels, with foreign buyers, particularly private equity firms, seeming to be spotting something in the UK that UK investors have missed.
Yeah, absolutely, yes. Well, thanks, Jane, and thanks for the introduction. Yes, it's been a very busy year so far for UK bids. Many of those bids haven't completed yet, so we don't know whether they're going to fall
By
through.
bids, you mean international buyers bidding on UK
international
equities?
buyers in particular. I mean, there are some cases, about 40% are UK buyers, but almost 50% of the purchases that have been agreed so far, or at least put on the table, have come from overseas, in particular from the US market. So particularly strong interest from US, you're right, notably from private equity. And I think the reason, and it's across a spectrum of large caps and medium caps. The UK market is relatively cheap. It's always been a little bit more cyclical than some other areas. And the hope is that with interest rates coming down at some point, that these companies are providing bargains. Great dividend yields in the UK, good cash flow, cheaper than the US and other international markets. So it's become a really good hunting ground.
So if Britain is so cheap, why has it stayed cheap and went for so long?
I think the markets, it's a really good question. The global markets have kind of split into cheaper markets. Europe is a little bit more expensive than the UK, but not much more. Emerging markets, which are re-rated over time, particularly as AI and technologies come through. And then we have the US that's led by the Microsofts, Alphabets, etc. And the US market is trading at a premium because growth from the US has been stronger.
In terms of the PE ratings and the forecast earnings, as we've talked about in the past, how does the UK stock market on average compare with, say, those more expensive similar businesses in the States?
So on average, the UK market trades somewhere between, say, 10 and 12 times in terms of price to earnings. The US market is at least 20 times, possibly in the low 20s on a given day.
So no wonder some of these American equity investors think we're cheap then.
Yes, I mean, that's true. There is a slight disparity in the high quality UK companies that are less cyclical do trade on higher multiples. So there's more of a variance, I would say, in the UK than there is in the US. But you're right. I mean, there's on average, it's a cheaper market. So a good hunting ground.
Yeah. So what is it particularly about the UK, the British stock market, that has meant we're so cheap then relative to those other markets?
I think it's a more cyclical market than others. So it has a greater proportion of, say, banks, oil stocks, which are more cyclical in terms of the world and economic cycles. But I think also the particular interest because the UK is relatively open for takeovers. So we don't have much protection for UK companies.
So you talked about large caps, but also mid and smaller caps. And I think last week, the UK mid and small cap stocks outperformed. I think in the weekly markets review, we were saying they gained 2.4%, while large caps rose 0.5%, but seemingly off the back of some of this M&A activity. So why is that? Why is there such volume in M&A activity at the moment?
Yeah, I think the performance is partly down to results, some good results in UK mid caps in particular. But I think it's just the ease of access on an EasyJet, which is in the process of being bid for from the US. It's a company which has been, I suppose, open for takeover over a long period.
Right.
There's a lot of consolidation going on in the airline business, and the opportunistic side is that these private equity firms have lots of capital. They're ready to deploy them. They don't see perhaps as much value domestically, particularly the US ones in the US. So they're looking to invest and buy overseas, and it's easier to bid for companies in the UK than it is in many European countries. So I mean, it's been great for the UK markets because the UK market has performed pretty well.
You also mentioned broadly positive domestic earnings. So it sounds like the UK is in better shape than the cheap stock market, and all of the headlines and the noise and multiple prime ministers and Brexit and all of that. It sounds like actually the backdrop underneath those sort of news headlines is a bit more positive. What should be there?
It's a great point. The UK stock market always seems to do better, or be doing better than the UK economy.
Yeah.
And I think part of that is that the majority of FTSE 100 and 250 companies earn the majority of their earnings from outside the UK. So they're benefiting from higher global growth rates externally. But it's also that we have some great companies that execute really well, and many of those are the ones that get bought.
Yeah, maybe they do. Right. Interesting. So probably time for me to sum up what's in my Canaccord takeaway coffee cup. So even though Britain's reputation may be stuck in the bargain basement, overseas buyers appear convinced that there is actually hidden value on the shelves.
Yes, I think that companies, particularly American companies, appreciate the quality of UK management teams and businesses, and also appreciate the ease in which many of those transactions can take place, and the combination of factors, having less hassle but also buying great businesses, is attractive.
Yeah.
And if you have US companies,
and relatively cheap.
Yes, and relatively cheap. So offering better returns than are perhaps available back at home.
So back to my coffee cup. Looks like takeover activity is booming, but for solid reasons, as you've said. So partly the price of the shares, partly good management teams, partly just nicely well-run businesses. Earnings are holding up. The economy perhaps looks more resilient than many expected. And the main point maybe is just that we're perhaps just a little bit more pessimistic about our prospects than overseas buyers are. Equity firms, international buyers certainly seem to be voting with their checkbooks. I wonder whether it's a matter of how long the public market investors will take to eventually reach the same conclusion then.
It's a great question. And I think the other factor, everything you said is absolutely spot on. Add into that the fact that private equity companies like Apollo, Blackstone, KKR have abundant access to relatively cheap capital.
Yeah, and they need to deploy it, invest it in something.
You've got a checkbook with lots of checks that you can write. Then all you need is the right companies to invest in. I don't see the rates of companies being bid for. I just don't see that changing. I don't see it suddenly going to decrease unless there's a major global economic shock, which suddenly means that capital withdraws. Yeah. So I think there's more to come.
Okay. Thank you very much. Thank you for your time today. And thank you for listening to the Canaccord Coffee Break podcast. Hope you've enjoyed it. And as ever, don't forget to hit follow on your preferred podcast channel of choice, and you will never miss an episode. Again, we'd always love to hear your thoughts. Do drop us an email. The email address is coffeebreak@canaccord.com. Thank you.
Thanks, Jane.
Investment involves risk. The value of investments and the income from them can go down as well as up, and you may not get back the original amount invested. Past performance is not a reliable indicator of future performance. The information provided is not to be treated as specific advice. It has no regard for the specific investment objectives, financial situation, or needs of any specific person or entity. It is accurate at the time of recording and is subject to change.